Bank stocks and China's stock market have entered a bear market at this time. They have been beaten down and have been unable to get back up again. In time, there will be a resolution to this which will have to be made. Either this pulls down the entire global stock market, or a series of bailouts will need to occur. Either way, it's going to be a bumpy ride. You came here for the truth, so let me unveil that for you. Today we're going to have two major topics, and that is China and bank stocks. Let's begin by taking a look at the Shanghai Composite. You will see that it is officially in a bear market, having declined basically 21%. And this doesn't seem to be stopping anytime soon. At the time of this recording, it has continued to decline. I would like to see where it goes in the coming weeks because it is getting quite severe. The central bank will have to step in at some point because this is officially a bear market. So they're going to need to react before the rest of the market starts to drop off and the contagion starts to take hold. You could see their currency has been devalued here, whether it is some sort of currency war taking place or not, I don't know exactly, but ultimately they do have full control over the value of their currency. They can print it, they can manipulate it in any which way they desire. This was more towards the $6 range, and now it is heading towards that $7 range here, and I would like to see how this plays out as well, because of course a country can make their exports seem more attractive by devaluing their currency. So it is something to note. Deutsche Bank has hit a record low at this time. We have seen this stock struggling. Right now it is at €9, and I would like to see how this particular company is able to grow out of the mess that they have found themselves in. There's no way. It's not going to happen. However, it's impossible to bail out this company. So they really do have a predicament, whether that is Germany, whether that's the ECB, whether that is the global markets as a whole, are all relying on this one stock. If this stock fails, it will create further of a disaster than what we had experienced with the Lehman, Bear Stearns, with the whole 2008. It's not going to be something that's pretty, I can assure you that. Of course, many people would say, well, they'll just bail it out. But I'd like to know what mechanism they will use to bail it out. It's literally impossible. The derivatives exposure that this one company has is bigger than the entire world practically. It's almost that big that we know about. So imagine what's going on under the table. Here you can see that comparison between Deutsche Bank and Lehman. I don't think it's necessarily a fair comparison, although they're showing us that they do match up. It's you know, there's more to it than this ultimately, but it's just something because when you saw what happened with Lehman, nobody thought that this could ever end up the way it did. Nobody predicted that. Just a few people. And so we found out the hard way. Here, Deutsche Bank, I would consider this to be one of the biggest banks in the world, and its failure would be absolutely catastrophic. Bank stocks just hit a record of losses. The S&P 500 Financials Index fell for the 12th straight day Tuesday, the longest losing streak on record. Coming into the year, many cited the tax overhaul and the rising rate environment as reasons for the banks to rally. Instead, they've endured pressure from a flattening yield curve. The losses also come ahead of the final phase of the Federal Reserve's annual stress test, totally fake, and waning consumer confidence. And they're talking about the reasons why this is all happening. It's more than what they're suggesting. There is general weakness in the economy. There is a general weakness here that is never acknowledged. Looking at the Stocks Europe 600 Banks Index, coming into January, they peaked out and have fallen ever since. And you will see that as a pattern. The same with China's stocks as well, and I'll show you more. US Financials ETF XLF, consecutive down days. This is a record right now. Seeing this going far beyond this record here, 20 years worth of timeline. It's never been this bad before. Even throughout the financial crisis, it's never been this bad. Here you'll look at the different bank stocks in the US, whether it's JP Morgan, Goldman Sachs, and all the other big boys, they are down as well. Peaked out in January, some of them a little bit later, but ultimately have fallen ever since. They're not going to be able to grow out of this mess. They're not going to be able to charge customers fees to grow out of this mess. It is going to fail. Globally systemic important banks, I think I got that one wrong. This systematically important banks, I think, down 22% from their peak. Even further than what we're seeing here in China. We have the most important banks, okay? They're literally too big to fail, and they're down 22%. All we can point to are FANG stocks rising. And that's supposed to keep this train moving? No, it's not enough. And then I want to finish off with this. Previously in January, how this all came about was because of the VIX. Everybody was shorting the VIX. It was an easy trade. It was an easy trade, and they were able to make money off of it. Short the VIX simply because the Federal Reserve has that short position already in place. Individuals can simply ride off of that and make money. And they were. Up until late January, things got messy. You saw what happened. The VIX index shot up, multiplied like crazy, almost instantly. And then we had this period of time in which everybody started to question the markets. Are they really not as safe as we were being told? Could this be the end of the bull market? Well, things started to come back to reality, but they've been trading within a range. We've seen the stocks go up and down and up and down, and ultimately the market has found itself within a range here. And I don't necessarily think that it has any strength to grow out of that as long as rates are rising, as long as the QE stops flowing. And so, what will come of this? Well, what we can do is make the exact same mistakes yet again, only a couple months later, and hope that everything will be just fine. And that is literally what's happening. The VIX is being shorted to the same rate it was before, just before we experienced this turnaround and the market started tumbling. We've hit the same level again. People don't learn their mistakes, even when they get hit hard. And that's the way people are. They don't learn valuable lessons. And they, quite frankly, are unable to make sense of basic, absolutely basic things that are available to us. Rising rates are going to be a disaster for the stock markets, for the bond markets, for the housing markets, for every market in between. Because this entire thing has been riding on the fact that we are going to give cheap money, that we're going to give free money, that there's going to be universal basic income, that there's going to be free everything to anybody who sticks their hand out. And it doesn't work like that. There has to be times in which we have hard times. It just has to happen. Maybe it's for a month. Maybe it's for 6 months. Maybe it's for a year or 10 years or whatever. It has to happen. But that's not being allowed to occur. It is a slow and steady decay or rot. And that's being seen in the real economy. Many people today are sleeping on the streets. I've gone through the streets of Toronto downtown and seen on all four corners of the street, and I'll tell you right now, if you're from Toronto or been there, on the corner of Yonge and King Street, four corners of the street, 4 homeless people staying there. And that's not the only example, but I remember that one now. We've got more people all around, yet we have homes being built that are multi-million dollars, people getting into million-dollar mortgages, and so on. Interesting times. I'll leave it there. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that very much. And if you want the financial education that was not taught to you in schools intentionally, then these 2 books have it all. I took all the knowledge that I have consumed over these years, put it all into these 2 books. We're going to get into everything with these 2. You'll be able to take this information, be able to analyze whatever it is that you're seeing. You're able to go to your financial advisor if you use one and ask the right questions. So if you want to flip through the books, you can do that at Amazon. There's a link in the description of the video. And if you're more interested in the audiobook version, you can get that at themoneygps.com.